The following is a sponsored program paid for by First Alliance Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
It's time for Good Money Moves. I'm Andy Brownell, along with Jenna Taubel, Director of Brand and Digital Member Experience with First Alliance Credit Union. Hi, Jenna.
Hey, Andy.
So this month, we've been looking at financial fears, which is very appropriate. Last week on the program, we talked about how loans can be scary, especially the application process, and what we can do and you can do to take the fear out of getting a loan. What are we going to talk about this week?
Yeah, so today we're talking about a very legitimate financial boogeyman, if you will, and that is the fear of an emergency situation happening.
Yeah.
You know, it's no secret that emergencies are very scary. And of course, that's because you can't predict when, where, or how they will happen to you. They're really are like a monster from a horror movie. You know, life is wonderful, things are fine, and then out of nowhere, suddenly something terrible happens. You're hit by another vehicle, or the tree falls on your house, or you fall and break your arm, or, you know, whatever it is happens. That's this terrible calamity in your life. And, you know, what makes these even worse a lot of times, right? Add insult to injury a lot of these times. It's very expensive to deal with these things. Right? You think about home repairs, auto repairs, medical bills that come along with all of these emergency situations that can cost hundreds and thousands of dollars unexpectedly. And, you know, that's obviously, there's even secondary expenses that go along with some of those things, right? You might have to rent a car while your normal vehicle is being repaired. You might have to hire a tow truck. You might have to stay in a hotel for a while if your house has to undergo repairs, or, you know, time spent visiting loved ones in the hospital, those types of things. So lots of money from one situation can pile up really quickly. And I think, you know, once an emergency has hit, a lot of people are then left wondering, how are they going to pay for this? Right? This was an unexpected situation, and a lot of times you just aren't prepared for it financially, emotionally, any of those things, right? And so and of course, this is especially true when you are injured, and quite a few jobs, you may even be laid off from your job if you can't show up, or if you're a contract worker, things like that. So lots of things can kind of a ripple effect from these emergency situations that come up. And then, of course, that kind of begs the question, if you were to lose your job, you know, you're losing your main source of income, and how are you going to pay for your expenses, your mortgage, your rent, all that stuff. So it gets scarier and scarier the deeper you start to think about it.
Yeah, and you dove in pretty quickly, pretty deep there. It got multiple layers that, you know, you think you can be prepared, but there's no way you can be prepared for every emergency.
Yeah.
Because they can just be that catastrophic.
Yeah.
Boy,
exactly.
Oh boy. And, you know, I think everyone has had an experience with it. And if you haven't, you're one of those lucky souls, and I wish you well.
Yeah.
But you'll probably catch up to you at some point.
Mm-hmm.
And it's very stressful. At times household emergencies have taken place, and thankfully nothing too catastrophic has visited us. And, but yeah, trying to figure out how to pay for everything suddenly is, when that money aspect of it rears its ugly head, that's when the real stress kicks in.
Yes, exactly. Yeah. And you really can't get rid of emergencies, right? You can try by being careful with your finances, and like getting more information. But at the end of the day, no matter who you are, eventually you are going to have to deal with an emergency financial situation. And, you know, the good news, though, is that you can definitely start to take some precautions to guard yourself against some emergencies. Right. For instance, you can take steps to make your home safer by having things like smoke detectors, carbon monoxide detectors that are working properly, you know, keeping your stairways and hallways free of things like tripping hazards, or even just having like regular inspections on things like your furnace, hot water heater, gas appliances, those things. Like those regular kind of everyday maintenance home care things, they do play into your risk level of having a catastrophic event happen to you. And talking about, regular inspections on your car, or just doing those regular maintenance things to help, again, reduce that risk of breaking down unexpectedly, so that you can be a little bit more prepared for any repairs that you might have. We've talked about that in episodes on the show before too. So, and I think it's important to think about too, another way to protect yourself against emergencies is to buy insurance. That homeowners insurance, renters insurance, that can at least help protect your belongings from damage. Should something happen to your home or your apartment, there's that sense of coverage there. And auto insurance too, right, gives you some coverage if you were to get in an accident, even some health coverage, in some cases roadside assistance, right, just to kind of help offset some of those really, really big costs that you could potentially be seeing. And of course, that health insurance, sometimes it's more helpful than not, it seems like, but it can overall keep medical costs down, even when you have a high deductible care plan. And some employers even offer things like disability insurance as part of benefits packages. So making sure that you have those basic coverages in place can really, really help in a lot of financial emergency situations.
What you find out about the health insurance is that, for your run-of-the-mill average stuff, it's good to have it. And like you said, helps offset the costs. You're still paying probably a good chunk of it with the deductibles today.
Yeah.
But when something really bad happens, then when you have that insurance, that's when it really pays off, because all of a sudden the deductible becomes a relatively small percentage of the overall bill.
Exactly.
And you do get covered.
Yes.
And, speaking of deductibles, it's become very, very commonplace in the insurance industry to have large deductibles as a way to keep premiums under control. So even if I do go through the process of being well insured, I still have the potential to be shelling out thousands of dollars in deductibles and copays if I do have an emergency, especially a medical emergency.
Yeah, exactly. That's a really, really good point, and which actually brings up the importance of making sure you have an emergency fund in place that you're contributing to regularly to help cover those gaps when those emergencies hit. We've talked about emergency funds and how to go about saving for those on many episodes of this show before, but I think, it's really just, you have to start somewhere. So start by saving like a portion of each paycheck. Really, the recommended amount is about 10%, but for a lot of people, that's not feasible. So really what you can comfortably save is better than nothing. And really, the key here isn't just once or twice a year you're putting money in there. It's that you're doing it regularly. So with every paycheck, with every direct deposit, consider really splitting up that paycheck into even separate accounts so that you have that portion automatically set aside, that you're not having to move around yourself, those types of things. And having it in that separate account can help keep you from spending it accidentally on something you didn't intend to, so that it really is available to you for those emergency situations that arise.
Yeah. Make it difficult to be tempted.
Yes, exactly. Exactly.
All right. That certainly seems simple. Create that emergency fund, but it's not simple, especially if you want to get it to the level where it's going to really be there when you really, really, really need it. So I guess maybe that begs the question, Jenna, how much do we need to have in an emergency fund?
Yeah. So, a lot of, financial experts say that you're doing really well with your emergency fund if you have at least 3 months of your salary saved in your account. So for quick math, if you make $1,000 a month, you would have $3,000 saved in your emergency fund, right? But Now, a more typical recommendation is that you should have 6 months worth of your salary saved to get you through almost any emergency, including losing your job. So, having said that, thanks to inflation, you should probably have 8 months of salary saved to be completely prepared, which I know it seems like a really tall order, and it is definitely not going to happen overnight, but it is a goal to strive for nonetheless. And again, starting somewhere, even saving $500 is going to help you get through a lot of smaller emergencies that are likely to arise in a given year. So I think it's also important to remember that the one thing that really makes emergencies less scary is that they are relatively uncommon for the most part, right? You're not going to have one every single week. You might have a few happen close to each other. Sometimes that's just the luck of the draw, but for the most part, you're not going to get into a major car accident every month. You're not going to have a tree fall in your house, multiple times a year, right? These are random, while albeit very unlucky events that happen. It's important that you are saving for these things because they will happen, but luckily they're not very common. So, and the reason that having that emergency fund works is that most people, again, don't constantly have to deal with emergencies or crises. And so you do actually have time to save up and be prepared for those emergencies when they hit. So like I said, even if you're only saving $25 a paycheck, that's going to add up relatively quickly because you're not having to tap into it all of the time.
Yep.
And even better news, after you've saved for a while, right, you can start to take advantage of different types of savings accounts that maybe offer a little bit more interest so that your emergency fund starts to grow even faster because you're earning better interest on it. So, for example, once you have that random $3,000 example I had earlier saved, right, you go open a money market account versus just leaving it sitting in a normal savings account. And you start to earn that higher interest, which again is going to help you build that up a little bit faster because you're getting that better rate. Or once you have, let's say you have that 8 months worth of savings of your paycheck saved, right? You can put some of that into a CD and grow it even faster, right? Because you don't necessarily need to have such liquid access to it because you do have that larger amount saved. So some longer term saving strategies I threw in there, but point being, you got to start somewhere. And the more regular you are with that savings habit, the better off you're going to be when an emergency does happen.
Good advice. Okay. We do have to take a break. We're talking about emergencies and how they're going to impact your finances, what you can do to lessen the impact and ride through those emergencies and come out quicker and in better shape than you thought. How's that? With Jenna Taubel with First Alliance Credit Union, it's Good Money Moves. Back in a moment on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
Welcome back to Good Money Moves. Andy Brownell with Jenna Taubel, First Alliance Credit Union, and emergencies. Probably one of the biggest financial fears you're going to face is how to survive an emergency, whether it be a fire in your home. That's the one that gets me.
Yeah.
You're going to not have a place to live likely for a while. You could find yourself living in a motel or relatives for months and months and months.
Yeah. Lose your belongings. You might have some medical injuries from the situation. Yeah, it's a big one. It's a big one.
The meals, you're going to be eating out a lot because it's just not going to be that easy to have, regular type meals.
Yeah.
Because of what's happened to your lifestyle. And so, you start thinking about all these different things that could happen. And it is becomes very much a financial fear, very
Yeah.
much a fear. And the emergency fund is the best, what, peace of mind thing that you could have is
Yeah.
just to have that chunk of change
Hmm.
that you know is ready to go, that if it does happen, you're probably going to be okay. You're not going to find yourself in bankruptcy or something like that, or have to run up credit card
Right.
bills. That's probably the
Right.
big one. You won't have to max out every card in your wallet
Right.
just to get through this process.
Yeah. Yeah. Which, and you talk about a whole nother fear, having to pay off said credit cards
Right.
over time. That's a whole, yeah, we talked
That,
about that already. Yeah.
yeah, that ends up being another,
It
an emergency
compiles.
of its own. But
Yeah.
the- when if somebody doesn't have one of these funds, an emergency
Yeah.
fund, that being, and it's always that one foot in front of the other thing. You have to actually take that first step and put, whatever it may be, $50 into
Mm-hmm.
that account and say,
Yeah.
next paycheck, I'll put $50 in, and just to get the ball rolling.
Yeah.
And I think that's probably the toughest thing to do on many of these good money moves topics that we talk about. And even if you have a salary or pay that you do not feel adequate to live on today, you can scrounge $25, something to
Right.
just get the ball rolling.
Yeah. Well, and I think too that, it is so important because if you think about, well, if you get started today and you save $50 a month, and then in 3 months something happens, right? You still have that's $150 you've now saved
That you
that you
didn't have
can put
before.
that you didn't have before, that you can now put towards paying for whatever that emergency situation is. That's $150 you don't have to borrow. You don't have to
Yeah,
borrow it on a credit card, a line of credit, or borrow it from a friend. Like, that is money that you just can put towards it stress free, right? And I think that's the important part. Like, don't get caught up in how much you have to save every month, and focus on the fact that every little bit helps keep you in a better financial situation for when something does happen, right? Because the goal with an emergency fund is to help you not have to potentially rely on high interest debt in the case of emergency situations. That's the whole goal of an emergency fund. So if you do end up having to borrow money to cover the cost of an emergency, it's not the end of the world, right? And you certainly don't want to have to rack up lots and lots of debt. But let's be real, most people, and we've talked about this statistic before, don't necessarily have even $500 saved to cover an emergency expense. So the reality is that you may have to turn to something like credit to help get through this. And that's, thankfully, there's those options available. But I think it's important to know, really, even before an emergency happens, what are your options financially to cover that if you don't have that emergency fund, right? Because credit cards, yes, you can turn to that, and in some cases you're going to have to, just because of how you have to make payments or things like that. But remember, that is typically the highest interest debt that you can take on. So consider maybe some other options that might be less costly when it comes to the interest portion. So things like personal loans tend to have lower interest rates than credit cards. Um, Another option that tends to get overlooked is what's called a personal line of credit. So it functions similarly to a credit card in that you can pay down a balance and then use the funds again, pull, pay down as needed, and you can kind of pull it into your checking account and then use your debit card to make those purchases or things. That's another way to kind of manage it with a slightly more affordable interest rate in many cases. And again, by opening that line, you still have this access to pool of money should you need it, right? And again, you can borrow as little as you need to get through the emergency, pay it back, right? And you're only paying interest on that amount that you borrow. So I think, making sure that you understand your full array of options before you just turn to maybe the worst case option, right?
Okay.
A lot of people will turn to something like a payday loan, but there's other options out there.
So when you're talking about the personal loan, a line of
Mhm.
credit,
Yeah.
and if you have a zero balance on this, you've made the application and you were approved, and it's
Mhm.
part of your account with your financial institution.
Mhm.
Is there a charge that's associated with it if it's inactive, or does it just
Mhm.
sit there and wait for you to need it?
Nope, it just sits there, at least at First Alliance. I can't speak for every other financial institution in the world, but there's no monthly fee, annual fee, nothing like that that goes along with a personal line of credit. It literally is just there for you should you need it. For example, I have one and I used it to pay for an emergency veterinary expense for my dog.
Okay.
And, like those are things where it's like
Yeah.
there's not really a lot of insurance coverage for pets
And those
out
bills
there.
are
There is.
high.
And but you can have some pretty high deductibles with that still. So how are you covering the gap? And at the time, I didn't have a sizable savings to cover that. It was several years ago now that I had to do that. And I mean, it was a lifesaver. I was like, there's no other way I could have paid for that. So like I said, there's going to be instances where you just don't have the funds to cover an emergency, and understanding the different types of credit available to you to help you get through that can really help even create a less stressful experience, because you're not now maybe having to make an emergency decision and making a wrong decision because you didn't know all of your options.
And the things you've been mentioning I think they've all so far fell under the non collateral loans.
Right.
I
Exactly.
could, if I have a home with equity, I could
Yeah.
use that to cut the interest rates, right?
Absolutely. Yeah. There people will definitely, once you have a decent amount of equity built up in your home, using something like a home equity line of credit can also be a great emergency line of credit for yourself as well. And we have a lot of members that do that. They will take out a HELOC and just let it sit there. And if they need it to cover, insurance deductible or, whatever, it's there for them. And they just let it sit there because you're not making payments, you're not paying interest if there's no funds drawn on that. So, again, same concept as the personal line of credit, but you're borrowing against the equity in your house.
But
So
so
your house is your collateral, which
yeah,
helps lower the interest rate because you have collateral
to keep that
further.
in mind, if you don't make the payments, you're putting your house at risk as well.
Yes, yeah, it's not risk free. No, anytime you're taking out any kind of credit or taking on debt, it is not risk free. But if you're using it for the right reasons and going into it that it's an affordable option for you down over time, you'll be fine.
All right, we're talking about emergencies, the kind of impact your finances. That is, and this is Good Money Moves. We'll return in a moment on News Talk 1340 KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340 KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
Welcome back to Good Money Moves. Jenna Taubel with First Alliance Credit Union with us, talking about emergencies and I guess how to ease your fears about emergencies by being prepared. Would that be a good way to describe the program today?
That is perfect, Andy. That is exactly it.
And we've covered, the emergency fund, which seems self-explanatory.
Yeah. Well, yes and no. If you're new to really paying attention to your finances, an emergency fund is definitely step number one for anyone. Even like I mentioned earlier in this show, even if you can put away $25, $50 a month, that's going to add up really quickly. And it's really going to help you if an emergency does pop up, so that you don't have to borrow so much money. because
Right.
that's the goal, is to kind of pad yourself and give yourself that financial cushion that's available to you, so that the emergency doesn't end up costing you more than it should because you're paying interest.
And it maybe lessen the long-term impacts on your financial
Yeah,
situation and your ability to reach your financial goals, because you can avoid as much as possible taking on additional debt to ride this thing out.
exactly.
Okay.
Exactly.
Great information as always. And as always, there's much more out there that we could be talking about, but our time is limited. So, Jenna, I'll direct it to you to perhaps point us in the direction we could go to find out some more about dealing with financial emergencies in our lives.
Yeah, absolutely. I encourage our listeners to visit our website, firstalliancecu.com. You can subscribe to our blog. We release new financial tips and advice out there every week. We actually have a whole video series on our YouTube channel now about dealing with financial emergencies and facing your financial fears. So go ahead and check those out on our YouTube channel. I mentioned a handful of past episodes earlier in the show. You can listen to those at firstalliancecu.com/podcast or on krocnews.com. You can subscribe to Good Money Moves on Apple, Google, and Spotify. And if you love our show, please take a moment to leave us a review on your favorite podcast platform. And if you have a financial topic or a question you would like us to cover on Good Money Moves, please send me an email at marketing@firstalliancecu.com. And of course, I strongly encourage you to reach out to our team at First Alliance Credit Union. They are here to help you start making good money moves today.
That is First Alliance Credit Union, federally insured by NCUA and an equal housing lender. Jenna, thank you again.
Of course.
Appreciate it. And we'll talk again next week with another episode of Good Money Moves on News Talk 1340, KROC AM and 96.9 FM.